Hey everyone, welcome back to the channel. I just wanted to make a quick video before I head out to the gym. Some folks really think that Tesla is the future of everything on four wheels, and maybe even on legs if you count those robots they keep teasing. Others think it's an overhyped bubble, it's just waiting to pop. So I just want to dig deep into the nitty-gritty of Tesla's recent financials, its growth challenges, and why I personally think that this stock is on shaky ground. Now, let's start with the headline numbers, right? Despite Tesla being valued at well over $1 trillion in market cap. Now, let that sink in. Over $1 trillion. The company's full year and fourth quarter revenue for 2024 actually showed a decline. What a surprise. In other words, the business is shrinking on a year over year basis. If that doesn't raise an eyebrow, consider this. Tesla's price to earnings ratio is floating above 170 times earnings. To be honest, that's pretty crazy. Most other automakers or even like big tech companies, they hover around more modest multiples, something like around 15 times lower. You don't have to be Warren Buffett to see that Tesla's valuation looks really steep for a company that's not even firing on all cylinders, right? Now, a lot of people are going to point to Tesla's free cash flow to argue it's healthy. But guess what? Tesla's free cash flow yield is barely above zero. We're talking about 0.25%, which is peanuts considering the hefty market cap. If you're shelling out top dollar to buy Tesla stock, then you're basically getting minimal returns in terms of actual cash flow. Let me dig into how Tesla's different segments performed, right? Automotive revenue, still Tesla's bread and butter, slipped by about 8% year over year. That's a big deal when it's the largest chunk of their business. Overall revenue only managed to inch up about 2%, which is actually lower than the inflation rate. On top of that, margins contracted enough that gross profit dipped by around 6%. If you're going to command a sky-high valuation, you generally want to be growing faster than the average economy, right? Not trailing behind it. You might have heard that Tesla's energy generation and storage side is booming as well. It more than doubled in revenue year over year, which sounds amazing until you realize its margins are a lot thinner than their automotive. So while it's great to see growth there, it's not big enough or profitable enough to offset the struggles in their main automotive unit. And another red flag is production and delivery numbers. Total vehicle productions dropped around 4% year over year, and deliveries dipped 1%. In a space that's fiercely competitive, especially with emerging players from China, these numbers are concerning, right? It has a production capacity of around 2.5 million units, but that capacity isn't being fully utilized. If demand were off the charts, you'd expect them to be churning out cars at full steam. Instead, there's a sense of stagnation going on, right? Let's talk about the competition. There's a flood of electric vehicles entering the market, especially from Chinese firms like BYD. These guys are ramping up production at breakneck speeds and undercutting Tesla on price in key markets like China. Then there's the fact that Tesla's market share in places like Norway, once a stronghold for them, is only about 22% now. It's not exactly world domination anymore. And we can't talk about Tesla without mentioning FSD, their full self-driving. Some people might say, hey, it's still the future. But to be frank, Tesla's behind on real autonomous driving as well. Waymo has already completed millions of autonomous rides, expanding in multiple cities, and doesn't seem to be slowing down. Tesla's approach with a camera-only system is still in a supervised state, with drivers needing to be ready to take over at any minute. The gap is getting bigger, not smaller. Musk has been talking about robotaxis and fully autonomous fleets for years now, but the reality is that they haven't materialized at scale. Now, speaking of new launches, Tesla has been delayed on some other key expansions as well, right? The Tesla Semi factory is behind schedule. There's no major vehicle expansion plan in sight for the bread and butter Model 3 and Y. And while there's hype about future models, nothing is firmly on the production line right now. That sort of coming soon approach might work for movie trailers, but it doesn't exactly shore up investor confidence when it's your main product pipeline. Let's face it, Tesla's stock is volatile. A lot of people have tried shorting Tesla in the past and gotten burned when the stock soared on Elon Musk's next big promise. But the insane volatility doesn't change the basic math. The stock is priced for perfection while the actual business is showing signs of strain. Now let me switch gears for a second, right? Tesla used to talk about 30 to 40% annualized growth in vehicle deliveries. Musk recently scaled it back to around 25% for 2025. But even that seems optimistic when you consider that we just saw a year-over-year decline. Sure, the energy storage business might be ramping up at a 50% clip next year, but it's not large or profitable enough to move the needle like their car sales do. So if Tesla can't make the numbers work on the automotive side, it's hard to see how they can maintain, let alone grow their lofty valuation. And look, I get it. The Tesla fan community is strong. Elon Musk has a track record of defying odds, launching rockets and pushing the boundaries. But at some point as an investor, you've got to look at actual performance metrics. Revenue's barely nudging upward. Margins are shrinking and the competition is heating up. Sure, you might say, this is a company of the future, but the scoreboard is showing a different story. You can't complain really if you're a long-term investor who got in early and you made a killing. But for the new folks looking to get in, it's so hard to justify the price. So what do I think about Tesla stock right now? Well, I'm sure you got a hint of what I think about it. Honestly, I'd say it's a sell. That might ruffle some feathers, but hear me out. When a company's trading at a ridiculously high multiple, while revenue and automotive numbers are slipping, I see way too much down risk. The hype might keep the stock elevated for a while, but eventually numbers do matter. Whether it's decreased demand in critical markets, losing out to Chinese EV makers, or failing to deliver on autonomous front, Tesla has more than one uphill battle. If you're holding Tesla shares, maybe you've already made a healthy profit. You've killed it. Good on you. But if I were in that position, I'd seriously consider locking in those gains. If you're thinking of buying in at these levels, I'd stay way away from this. The fundamentals just don't support the price. Of course, I'm just your average Joe giving an opinion on the internet, so you have to do your own research. Still, I can't look at these declining revenues and those nosebleed valuation and tell you that it's a smart buy. Anyways, I would love to hear what you all think. Do you believe Tesla will pull off a major comeback with new models, better margins, or a sudden breakthrough in full self-driving? Or do you see the signs like I do? The production slowing down, the shrinking market share, and the tough competition, and think the ride is about to get a whole lot bumpier? Let me know in the comments below. And hey, if you enjoyed this breakdown, don't forget to smash that like button and subscribe for more stock deep dives. Thanks, guys.